Hello and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group. It is Saturday the 17th of December, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 67, season 8 of Motor Trade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
Well, it's certainly getting close now, Curtis.
It is, yeah.
Sprinklings of the white stuff everywhere and getting a little bit cold now. Lots going on, isn't there?
There's a thick blanket of the white stuff in my back garden as we speak.
Yeah, we're getting close, but so we're getting now towards the end of our 8th season, isn't
Yes,
it, Curtis?
yeah.
So I mean, can you believe we've been going that long? That we'll be going into our 9th season next year, but there's still a lot to do, isn't there? Before we break up for Christmas and the New Year.
Yeah, we reckon we'll have at least 2 more podcasts after this one, don't we? Because next week, do join us because we've got a used car special. So as our guests, we'll have Phil Jones from eBay Motors Group, Andy Condy from Mannheim Auctions, and David Billsborough from Cheshire Cars. So the thoughts behind this was that it'll just give us a perspective at the end of the year to look at retail, wholesale, and marketplace, and look at the views of current trends and prospects for 2023 by chatting with our 3 guests.
Yeah, and you'll certainly need your eggnog for that one, won't you, Curtis? Because if there's one thing we've learned over the last year or two with me, Andy Condy, and David Billsborough on a podcast when you've been taking well-earned breaks, we certainly know how to talk, and we can chat about the market forever. And then we're going to be joined by yourself and Phil Jones, and Phil Jones has obviously got a wealth of knowledge and likes to chat about his area of expertise. So I would certainly get your eggnog at the ready, get a jug of that next to you, and make sure you tune in for that one next week.
Yeah, it'll be interesting to see which one of us manages to get a word in edgeways. I know who my money's on, Phil.
and you talked to me about me being a panel guest as well. I think there's probably enough with those 3, and we'll be the hosts. We'll do the question, try and keep them in their lanes and keep them focused on time. But it's going to be a great chat, great catch up, that, because wealth of knowledge from all 3 of those guys, and looking at their areas that they operate within will be a fascinating interview, no doubt. So very much looking forward to that one.
And if that's not enough, Phil, after that, so the week between Christmas Day and New Year's Eve, we'll have a special CAP HPI review of December's used car value trends. So that's our monthly catch-up with CAP HPI, and we'll be going ahead with that. So do look out for that. That will drop in your podcast feed at some stage after Boxing Day. So when you'll be looking for a welcome distraction from the festivities, I suspect.
Trying to understand what's just happened this year, in particularly in December, but more importantly, and as always with CAP HPI, with the interview with those guys, it's they'll be talking about what to expect. So it'll be the latest of where the market is and where they see it as we sort of open the doors for the new year. So I think it's very important that we get that on and share that with you at that time before we sort of go into the new year. So please do stay tuned for that one. And as always, the newsletter will be out on Monday mornings. So everything we talk about on the Saturday podcast the headlines will be shared within the news feed. So if you haven't subscribed to the free newsletter, then please do head over to either my channel, Curtis's channel, or even the Motor Trade Radio LinkedIn channel and subscribe. And that'll come straight into your feed. You'll also get an email notification to say it's there. And like I say, on there will be the links to all the headlines that we cover on a weekly basis, plus a link to the recording as well. But you should already have that if you're hearing me now to tell you about the newsletter. But it's been very well received so far, and a great source of the information to be able to have a little bit more read into the details that we talk about on the podcast.
Yep, and we're heading towards 200 subscribers. So if you can get us over the line, that would be appreciated.
Be fantastic. And as always, you can contact us. So if you'd like to get in touch with us or come on the show or send us a press release that you'd like us to cover, then do email us at motortraderadio@yahoo.com. Or you can also join the Motor Trade Radio LinkedIn group, as we said earlier, or follow us through Facebook groups or on Twitter, or get in touch with either Curtis or myself, any channel, any through any of those channels you like, and we'll gladly have you on as a guest, or send us your press release that you'd like us to talk about.
So, headlines this week are from Automotive Management, Car Dealer, Motor Trader, Auto Retail Agenda, and This Is Money. And we'll begin in a minute with nearly half of all new and used car buyers expect to make a purchase in 2023, finds latest eBay Motors Group research. Retailers need to navigate mistrust and short supply to fine-tune used car stocking strategies. We'll have a roundup of a story that broke towards the middle of the week from Stellantis. So, Stellantis Chief CEO Paul Wilcox speaks out after dealers reveal firm's plans for customers to register and pay for cars that haven't arrived in showrooms. We'll have a look at car finance. The latest FLA figures are out on car finance sales for October, and we'll follow that with why Chinese EVs are sparking finance concerns for some used car dealers. We'll also have the latest on the on-off head-in bid to take over Pendragon. And finally, we'll reveal the top 10 most unreliable car brands according to WarrantyWise.
And just one thing I noticed there, Curtis, we haven't got anything about agency in this week.
No.
We've been a little bit quiet this week. What's happening there?
We have now. You just mentioned it.
Well, we can't go out. Yeah,
Yeah,
throw Dieselgate in there and Brexit as well, and let's get them all
yeah.
covered. But yeah, I just noticed that one. But yeah, I mean, as Curtis said there, we're heading over to the car dealer, and the first story is nearly half of all new and used car buyers expect to make a purchase in 2023. And this is a survey by eBay Motors Group, and they quizzed 2,000 buyers and found nearly half want to splash the cash next year. So that's great news for the sector, isn't it? As we sort of close down this year and head into 2023.
It is, yeah, and I saw the original data on this because I did help the guys with this particular press release. So, 43% of buyers expect to purchase a car in the new year. So, if you start to break that down, nearly a quarter, so 22%, said they think they will buy in 2024, and those looking further into the future include 11% who expect to buy in 2025 and 7% in 2026. But yeah, the main focus really is that high percentage, 43%, who expect to buy next year. And the data actually shows that of those planning to buy in 2023, nearly a third expect to transact in Q3.
Yeah, and it's quite interesting the sort of respondents on this one that sort of indicated around 2023, saying that eBay Motors said that the appetite to buy in 2023 is concentrated on new and nearly new and driven by men under 35 and households earning over £60,000. So that's quite a defined sector of the consumer market, isn't it?
Yeah, definitely. So the cost of living crisis will, of course, have a major impact on whether buyers put their car buying decisions on hold. So the consumers were in the Consumer Insight panel as part of this research were asked about how cost of living would impact, and nearly a third of buyers said they will delay their next purchase because of those concerns about the economy slipping into recession and increases to their energy bills. But Other significant factors in delaying purchases included the impact of inflation on goods and services, increases to council tax bills, and the rising cost of borrowing. But Lucy Tugby, who is the marketing director of eBay Motors Group, said, our research reveals a strong intent among some car buyers to make a purchase in 2023, despite the challenges of the cost of living crisis, while many are taking an understandably cautious approach to making a big ticket purchase, factoring in the impact of the looming recession, rising energy bills, and inflation. Dealers will be encouraged by the resilience shown by buyers. And I think that's really the key to the story, isn't it, Phil? It's that keenness to go ahead and make an acquisition, buy a car in 2023.
Yeah, and I think with all of this, and much of the commentators on the sector are sort of saying that there'll be an element of the market that will be needing to change. They need a car.
Yeah.
As we're speaking at the minute, we've got train strikes, and we've gone through all of this challenges. We've gone through the COVID where people have been nervous of public transport, which turned people towards driving a car. And these people will need to change either through necessity and requirement for work and travel and things like that. So, I think although there is the challenges as we move into sort of 2023 around inflation, around cost of living, around interest rate rises, but when you've got a vehicle that you've on a 2-year contract, 3-year contract that you're coming towards the end of, you need to replace it. Now, the type of vehicles might change in terms of what you change that vehicle for, but I think the key is that people still need vehicles, and that's a positive message in terms of the percentage of customers that are looking at changing in 2023 and even into 2024. So in the next 2 years, it looks like we are going to get some of that recovery that we've been desperate for in the market.
Which brings us neatly on to the next story. It's almost as though we plan it like this, Phil.
Yeah, it is, yeah.
This is from AM Online, and the headline there is Retailers Navigate Mistrust and Short Supply to Fine-Tune Used Car Stocking Strategies. So this story, I mean, it's about the continued shortage of new vehicles, and the demand for used vehicles has left car dealerships with a bit of a dilemma. So a lot of this is really down to margins, dealers not cutting prices, and looking at replacement stock, which is still pretty hard to find, especially for those sub 3-year-old cars.
Yeah, and that's the key with it. And there's myself in here. There's Neil Smith, which many will know from Imperial Cars, and a good friend, Graham Potts, who's the chief executive of Eden Motor Group, all sort of commentating. But clearly, we've lost 46 million new vehicle production vehicles over the last 3 years. They've gone. For the UK, we're going to be losing 2.7 million new car registrations when we get towards the end of this year. We're now heading into that third year since we started to experience that production loss and loss of registrations. And, albeit at the minute there is a bit of caution about when to start to stock up and when, with the consumer confidence being a little bit low. But reality is that there's not a lot of stock coming. There might be little green shoots here, there, and everywhere, but nothing significant is on the horizon. And it's about, the key message throughout this story is about keeping calm, keeping focused, and making sure your stock's right, you hold your margin, and you keep firm on what you're doing. Because the minute consumer confidence starts to return, depending on what the government does in terms of the new year, and we're getting the interest rate rises this week, and the unemployment figures and the CPI all have been out this week. There's a lot happening, and we just need to make sure that we don't get into a panic, because there's no significant volumes of used cars entering the marketplace.
Yeah, and a couple of the talking heads in this piece, which is it's really a piece of analysis, isn't it? It's
Mm.
a feature length piece written by Alex Wright, and a couple of the quotes here, including I think from yourself, Phil, is that importance of hanging on to part exchanges because if they're retailable part exchanges, they need to be kept, and they're a rich source of stock for dealers, which previously would have traded them out.
Yeah, I mean, it is. It's all that sort of diversions of that sort of purchase channels that dealers are doing to purchase their used vehicles. It's that retention of part exchanges. Also, the age and mileage profile that sort of we saw increase at the start of the pandemic as stock became extremely short has remained. Some of the dealer network are enjoying profit from those older, higher mileage vehicles that they may not have normally operated in, and even to the point with electric vehicles, that there's many now moving into that alternative fuel and EV sector that they wouldn't have normally gone into because they've had to move into that sector just to get stock. So there's a lot going on in that marketplace, and even just this week through dealer auction, I think they announced that the average margin for the month of November is still close to the £2,000 per unit, which is very positive. That
Yeah.
even now, as we head towards the end of the year, the average margin is still up to that £2,000 mark, that we've seen all year, hover around that sort of marketplace. So I think it's about keeping calm now and making sure that 2023, if we get some increase in volume, that we maintain that margin, as we do that to sort of recover some of that profitability.
And talking about keeping calm, we'll head over to car dealer. The headline there is Stellantis chief Paul Wilcox speaks out after car dealers reveal firm's shocking behaviour. So this, I mean, I do urge you to go over to the car
Yeah.
dealer because it's a two-parter, this story. So midway through the week, car dealer ran a story. It was a very good story. They'd had a tip off from some Nissan dealers. I think it was specifically Nissan,
Mm.
who said that there was all sorts of pressure being put on them to get their customers to register cars that were still in transit that hadn't actually been delivered to the showrooms. So the follow-up story, which is the one that we'll concentrate on, is the response from Paul Wilcox, who heads up Stellantis. And let's not forget that Stellantis covers a number of brands. So there's Peugeot, Citroën, DS, Vauxhall, Jeep. Have I missed anyone out? Fiat, Abarth. So
It's 14 in total. Yeah, yeah,
yeah, we're
yeah.
talking about a lot of brands, and this is it's going back to a subject we've already covered, so far on this particular podcast. The supply issues. So it's the way that Stellantis in the UK is addressing these supply issues. So what they've come up with is what they describe as a short-term plan. Paul Wilcox is saying, this is a 4 to 6 week plan whereby customers are being encouraged to actually register their vehicles even though they haven't taken delivery. So this will mean payment of some of the finance, insurance, road tax, and that's whilst the cars, I think, predominantly are still at the port of entry.
Yeah, and I think at the minute, yeah, there'll be many dealers listening that throughout the years have been involved with taxing vehicles before the car's been landed in the country. That the vehicle's still only on consignment, but it is a position that the vehicle can be taxed. Now, sometimes that happens when somebody's chasing a quarterly or monthly or annual target to get to some kind of bonus trigger point, or there's some incentives from the OEM to reach a certain level of target, etc. Or it's an end of model year and those vehicles have got a deadline, as we saw through RDE and WLTP, and need registering, even though the car may not be physical. But I think what's different with this one is it's kind of coming from the OEM, because I think there's a comment in there about there's being incentives for them to do it. There's comments where the challenge is around the vehicles still down at ports. Never mind, they might have landed in the country, but they've got issues with the distribution to get the vehicles out of port to the dealership. And it's a crazy position to be in, isn't it? That these vehicles are all there. They've obviously all
Yeah.
been built. They've always been, obviously, by sounds of it, been built to orders, as we know with the lead times and order banks that we've been experienced throughout the year. But this is where the dealers feel like they're being pushed into making these decisions. And there is a couple of comments from Jim Holder, who is the editorial director at Whatcar on this, and he's coming at it that he's sort of saying highlights that Stellantis' approach was risking its reputation amongst car buyers. However, it's the franchisees potentially suffering the impact of dissatisfied customers and cancelled orders, and that for all the justification and merits or otherwise of them, nobody at Stellantis seems to be focused on the car buyers and the appalling experience of being asked to pay for cars that haven't been received. So Jim Holder's coming at it from not necessarily the dealer's side, but the consumer's side, that are going to be
Yeah.
dissatisfied, and then therefore it's the dealer that's then potentially risking sort of customer satisfaction levels with their customers.
It's a tough sell for the dealer, isn't it? Because they're very much in the firing line there. It's not something they particularly want to do, but they're being encouraged to do by Stellantis. Although Paul Cox does actually make a really fair point, because at the beginning of our chat about this, the key to this is about stock. And what Paul Wilcox says is that countries who have stock on the ground have less chance of getting fresh supply. So this is how it's being treated centrally by Stellantis. And his quote is that we wanted to position the UK as a very clean, low stock market so we could secure more supply. And that's put us in this situation. And he goes on to say that the plans that Stellantis are putting in the UK is to improve what he calls dealers' stock velocity. So it's just trying to clear whatever's been ordered, whatever's in stock, so that the UK can place fresh orders. So you can kind of see where he's coming from. And if they are working to that 4 to 6 week time frame, then it's a bump in the road, and
Yes.
hopefully by mid-January it'll be back to normal. But there's some interesting asides within this story, because dealers are being incentivized
Yep.
to actually pick up customer cars from the ports of entry, albeit through Stellantis. Stellantis want to coordinate it because, as Paul Wilcox points out, he doesn't want 500 cars with trailers turning up at various ports around the country to taking stock back to the dealership. So there is an incentive for that.
Yeah, and I think it's going to play out into it. It'll be
Yeah.
interesting when we get the December registration figures. Let's see who's who's up there in the top 10 for volume of registrations in the month of December. I'm guessing that some of the Stellantis brands might be up there. Curtis, what's your thoughts on
I suspect so. Yes, I
that?
think your money is safe there.
You might get the cars in the new year, but we'll see the registrations in this year. So no, I think this is going to carry on. I think as it starts to evolve, but clearly that from Paul Wilcox there within the tone of it, it's trying to do the right thing for the UK dealer network to move these vehicles into the marketplace and get them registered, and therefore create, as you say, that the velocity of volume throughput for the UK. Question whether that is the right thing that the dealers want to do, and to Jim Holder's point, whether it's the right thing for what the customers want, remains to be seen. But I'm sure it'll get worked out one way or the other.
You're listening to All the Chatter That Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So heading over to motortrader.com now, and this is the latest figures from the FLA, and talking about the new car finance sales up 12% by value in the month of October. So, saying that the consumer new car finance market reported a growth in new business of 12% by value and 2% by volume in the month of October compared to the same month in 2021. Now, I suppose part of this is down to probably the increase in vehicle prices that we've
Yeah.
seen over the
Yep.
years, potentially the fact that the manufacturers are the main supply coming through for the manufacturers being focused on that higher end, the more profitable vehicles for the manufacturers we've seen. And we've seen an uplift in registration for the month of October compared to the same period of last year. So I suppose it's all these coming together at once to create this result.
Yeah, and there's some encouraging words here from Geraldine Kilkelly, who's Director of Research at the Finance and Leasing Association, because she says in October, the consumer new car finance market reported monthly growth for only the fourth time so far this year. And she goes on to say that while further growth in the consumer used car finance market reflected the consistently robust performance by this market over the same period. And in terms of where the market is likely to go, because we're talking about October, there's always a lag between the FLA figures being reported and it being in the open. But that goes on to say that consumer finance is expected to report new business volumes in excess of 2.2 million vehicles by the end of 2022, which would be 4% higher than in 2021. But if you start making sort of pre-COVID uh, comparisons, it's 10% lower than
Yeah.
in 2019.
But like you say, similar, it's encouraging now, isn't it,
Yeah.
that we're starting to see those green shoots of recovery. It's encouraging us in terms of that finance market that they are funding those vehicles. And I suspect, when we get into next year that we'll continue to see these potential increases, particularly year on year growth there. So one that we'll certainly keep an eye on. But sticking with finance and heading over to AM Online, saying that Chinese EVs spark finance concerns for used car dealers. Now this is from the monthly used car tracker from Startline Motor Finance, with some data that they've been looking at, which is quite an interesting one. This one taking a view on the risk and the concerns from the what we class as probably the new entrants of the EV Chinese operators.
Yeah, and this is all around securing stocking finance for this new wave of EVs coming from predominantly China. So the data from the used car tracker shows that 54% of dealers would be concerned about this issue, while 16% are apprehensive about the lack of a support network for dealers in terms of things like parts, and 12% about poor customer brand awareness, and a further 8% about the collapse or withdrawal from the UK of the manufacturer. So this is actually before any of them have come here. Dealers are concerned about the longevity of some of these OEMs, these new EV OEMs staying around.
Yeah, I mean, it is a. I mean, I suppose really, we talk about it a lot, and I suppose it's not necessarily just EV operators, is it? Coming from China, that they are manufacturers of combustion engines as well within some of their model lineup. But you can kind of see where you've got over in China in excess of 400 manufacturers. You've probably got 70 manufacturers, any sort of true volume, and you probably got 20 that you could see as potentially entering the UK market. We've talked about the Great Wall, haven't we, and BYD and those kind of operators. But you can kind of see that concern, can't you? That how long are they going to be here? What is
Yeah.
that longevity? What does that mean for them as a dealer getting in sort of partnership with these operators, and what does that mean for the warranties and quality of these vehicles in the future? But I suppose it's difficult, isn't it? Because these manufacturers may actually be the volume replacements for the shortfall that we're currently experiencing in the new car market, and might be those used cars that you need in the future for that used vehicle park.
Yeah, and you can understand some of the concern amongst dealers, especially independents. So they don't hold the franchise, but at some stage they'll be trading some of these new
Mm.
brands on their forecourts. And it's interesting that dealers were asked, what would allay some of their fears. So 65% said that they'd be a bit more convinced by long manufacturer warranties, which is understandable. 56% say that they'd be convinced if it's proven that the engineering is of sufficiently high quality, and 47% say that they'd be they'd take a better view if the franchise dealer network offered support.
Yeah, and I suppose it's you can probably look back at the Hyundai Kia when they entered the
Yeah.
market,
Yep.
and where they are today, particularly Kia, in terms of what they do and how they do it. I mean, that brand has accelerated significantly, and even to MG in the the return to the UK market and what they've done, and the volumes that they've done over just the last year or two have been significant, and their sort of model lineup of vehicles and their aspirational growth for the years to come. But clearly that there's a comment here about the registrations of Chinese-built electric vehicles soared 78% across Europe during the month of August, as an overall registrations rose for the first time in 2022. So, they are coming. They are coming in significant volume, and they are potentially going to sort of fill that deficit shortfall that has been causing a lot of the concern. But you can kind of see it that some of these other operators came to the market, didn't they, and straight away put those 10-year warranties on and things like this to give that confidence to the consumer. And Kia and Hyundai has been the prime examples of they've stuck around, haven't they? They've done very
Yeah.
well. I mean, they did very well out of the financial crash, didn't they, with the scrappage scheme, if you remember at the time. So,
Yeah,
yeah,
definitely.
you can understand the concern with this, just by the numbers of sort of manufacturers that are thinking of coming. Because it's kind of the volume that we've never really seen before in terms of number of different manufacturers that are looking at entering. But some good research there from those guys as usual.
Yeah, definitely. And heading over to Auto Retail Agenda, the headline there is Hedden abandons Pendragon takeover bid. So that kind of sums it up quite neatly, because this one's been rumbling on for months and months, hasn't it? Because Hedden, who are the majority shareholder of Pendragon, they've got a 28% stake in Pendragon. They have made a number of moves to take over the group. There's been bids and counter bids, and the most recent one, the most recent offer was made in late October, and
Mm.
it was extended to the 21st of November. So this is kind of the result of this. Now, also Retail Agenda reports that Hedin has abandoned the takeover bid, citing, and it quotes, challenging market conditions and uncertain economic outlook. So that kind of sums it up. But it's worth pointing out that just 2, maybe 3 weeks ago on the podcast, we reported that Hedin, who are a major European dealer group, actually bought their first physical sites in the UK because they acquired the South London
Yeah.
market area from Mercedes-Benz Retail Group, and that included the flagship Brooklands showroom there. So they have established what they've long sought, which is a physical presence in the UK.
And I think maybe there is an element that it may be seen as a little bit too quick on the back of that acquisition, because I'm fairly confident that it probably wasn't a cheap acquisition for those Mercedes operations. Um, in a time where there is a bit of a challenge around the speed of recovery and how deep the UK recession will be. And when you get things like the OBR being so far out to the Bank of England in terms of the forecast outlooks, which has been noted a few times, I suppose you could actually see where there is a little bit of concern, whether Lithia, who were obviously one of the rival bidders will return to the table. He's probably unknown at the minute. I know that the sort of US international investment in UK market is probably for the similar reasons as to why Kedden is saying they backed out is probably slowed down a little bit there. But I think there's a comment in here that they are still fairly confident about the long-term prospects of Pendragon. So you can see this might just be on hold for a little while. But I think, my view, something 6 months' time, if not before, something will happen. It started, hasn't it? There's been enough interest in the buying of it, be it Lithia, be it Heading, and even there was a comment about Constellation being interested in it. That you just feel that something will happen. It's just who and when it will happen is the key with this one.
I think there's a strong possibility that we will return to this story, albeit with different names involved.
Yeah, there's still 2 podcasts before the
Yeah,
new
yeah.
year. You just never know with these things, do you? I think each year there's this last minute flurry of things that we try and keep an eye on and keep you updated with. So yeah, I'm with you there, Curtis. I think this is definitely not over. I suppose it's just when it returns and who that is, because they're still talking about the value being worth 35 pence a share, and I think they've got now down to just above 20 pence a share at the minute after the exit of Heading. So painfully, I think a lot of people felt that they were doing very well and then not very well. But yeah, it's a long term on this one, so we'll keep an eye on that one. And now something a little bit different, because we're going to be looking at the bottom 10 with no top 10. So sorry about this, Curtis, because I know you like your top 10, but
Yeah, yeah.
this has thrown you a little bit, this one, hasn't it? That
It
there is not
has.
a top 10.
It has totally. So this is money. I won't read out the headline just yet because it contains a number of spoilers in it. But this is their coverage of the annual Warranty Wise survey of the uh, 10 most unreliable car brands. Now, from memory, and I was really scratching back into my memory, I thought they used to do a top 10 most reliable and top 10 most unreliable, where they do actually
Mm.
name each and every brand according to really the warranty claims that it processes over the course of the year.
Which would kind of make sense, wouldn't it? That doing that top and bottom 10 was always the way. And
Yeah,
and, and
yeah.
as you say there, I mean, they've obviously gone just purely from the negative side on this one. Obviously, looking at that, the most expensive costs or the most expensive one-off repairs for some of these worst performing manufacturers. Do,
Yeah, and
do you want to go for your bottom 10?
I will go through the bottom 10, and some of those costs are quite eye-watering.
Yes.
Maybe we'll talk about those in a moment. But the data really represents, so the data this is based on is cars that are outside their manufacturer warranties. This is how Warranty Wise actually captures and processes its data. So here we go then. The most unreliable car brands revealed for 2022. So the top 10, starting at number 10, Mitsubishi, number 9, Volvo, number 8, Vauxhall, number 7, Mercedes-Benz, number 6, BMW, number 5, Audi, number 4, Alfa Romeo, number 3, Jaguar, number 2, Land Rover, and sitting there at number 1 is Porsche. And I'll just I'll just add again, this is according to Warranty Wise. This is all Warranty
Yes.
Wise's data.
Yeah.
But I'll share the headline with you now. So the headline for that particular story on This Is Money is, "We're not telling porkies. Porsche named the most unreliable car brand ahead of Land Rover. Is your maker among the 10 worst performers?" So quite a sort of sexed up and
Mm.
sensationalized
Yeah.
headline there.
Well, I mean, you sort of look at some of the numbers quoted, and this is again based on a single repair bill for the models on each of the brands in the year 21, 22. And I mean, if you look at the sort of highest there is Land Rover, and they're saying that the most expensive one-off repair for Land Rover through that period was £23,889 and 53 pence. I say,
You'd
ma-
think they'd round down
say
that
that
53 pence,
say,
wouldn't you?
say that quickly. Yeah, you just rounded that off as a male. I'd say a little bit behind, but yeah, the next one is Mercedes, £23,302 20 pence. And the bottom performer, with Porsches, they're highlighting as the worst one, has got an average bill of £10,784 and 60 pence. With Jaguar just short of 17,000 at £16,990 and 2 pence. So very fine detail here in terms of the analysis, but there are some eye-watering numbers there, isn't there, Curtis, on the ones we've read out, and Audi, BMW below the sort of £20,000 mark on average, and then you're into sort of Vauxhall, Volvo, Mitsubishi, that are all kind of below that 10,000 mark. But yeah, I think that 20 just short of 24,000 for Land Rover is that's it's a frightening number, isn't it? That.
Yeah, and as the piece points out, that's almost the price of a brand new Volkswagen Golf. So these are eye-wateringly high figures, but they are the extremes. They're not
They
the
are, yeah,
averages.
yeah. This is the sensational extremes, and I suppose with that Land Rover, see what in the future what that new £150,000 Range Rover starts to cost when that gets into the warranty used car marketplace. But yeah, some interesting numbers. And let's say normally we would have a top 10 to give you the best, but unfortunately on this occasion it is just the worst ones with some significant eye water. And I'm sure there's some dealers listening this morning that have experienced some of the eye-watering repair bills on some of these makes that we've just mentioned there. But yeah,
And you know what, Phil? Whilst you were talking, then I just scanned and I found Warranty Wise's 10 manufacturers with the best reliability records. So Honda tops the order with a score of 96.8 out of 100, ahead of Toyota and Suzuki. So this was actually released a month or so ago. So this slipped us by. So apologies for that. But it goes on to point out that, in fact, the rankings of the most dependable brands were featured a lot of Asian brands, with Kia, Hyundai, and Mazda among the best performers. And that kind of ties in with what we were talking about earlier about just how far the likes of Kia and Hyundai have come.
yeah, with Kia being in fourth, and just behind them with Hyundai, the little poor partner there, just in fifth position there in that top 10 score. So yeah, I think interesting. I don't think there's any costings against some of these. I think they've kept it at a fairly high level, but yeah, the in fact no, there is some costings, isn't there? Because they've got the Honda Jazz at just less than 1,000. It's kind of it's peanuts, that, isn't it? To be fair, compared to that
Yeah,
Land
yeah,
Rover
yeah.
one. Yeah, Honda Jazz, that one. So yeah, some significant low numbers there. But yeah, as always, we'll the links to these stories so you can look at them in a little bit more detail. Will be on the newsletter on Monday morning. So look for that in your LinkedIn feed or your email if you've subscribed. And if you've not subscribed, then please do subscribe. And all the links to today's headlines will be in your newsletter on Monday, where you can read some of the details of the stories in let's say, a little bit more detail there.
But that's all for now. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chatter that matters. We're back with the used car special next weekend. Until then, it's goodbye from me.
And it's goodbye from him.